Hi, everyone. Thanks for joining us today. I'm looking here. It looks like we've got a number of folks on already, so we'll go ahead and get started. And I think today we're going to talk about something that I think is an often underappreciated consideration regarding the investment case for the crypto asset class, and that's the generational divide in both the acceptance and the understanding of this technology. And this divide, I think, is something we see not only play out with investors, but also the policymakers that are working to regulate this space, where we've seen in globally that those who have taken a more kind of proactive and constructive position on this technology tend to be part of a younger generation. And I think a lot of us have seen this too anecdotally. I often just think about, when I talk to my 74-year-old mother about crypto versus my 17-year-old niece, it's two very different conversations, right? And my 17-year-old niece, growing up digitally native, has a very good understanding of what it means to transact online and that type of thing. So we're seeing that play out in the space, and we're going to have a great discussion today about this divide. Two great guests that I know have been thinking a lot about this topic, in particular for what it means for this emerging asset class. Samir Kerbage is CIO here at Hashdex, and Vetle Lunde is Senior Analyst at K33 Research. And before we get started, I'll do the usual two administrative items, actually. First, this webinar is for educational purposes only, and for any product-specific information, please refer to the appropriate prospectus. And the other thing I should mention is that we're going to try to keep this discussion to about 45 minutes. So we'll go and do a Q&A back and forth for the first 30 minutes or so, and reserve 15 minutes at the end for audience questions. So please feel free to submit those questions at any point during the webinar, and we'll make sure and reserve some time at the end to address them. So Vetle, I think I'll probably start with you. Earlier this year, I think it was April, K33 released a survey regarding crypto adoption among different age brackets. And so it'd be great if you could talk about the survey and some of the key findings as well.
Sure. It's been actually a survey that we have ran for the past 5 years, primarily in the northern Norway. And then we have expanded the survey this year to the Nordic countries. The aim of the survey is to ask a representative panel of 1,000 individuals per country about their ownership of crypto, to identify ownership trends in crypto in the Nordics. The survey indicated that 7% of the Nordic population, approximately 1.5 million people, currently owns crypto, whereas in Norway, the growth in crypto owners increased by 15% in 2023 compared to last year's report. So it's currently on a good adoption cycle. And also, the survey includes a question asking respondents whether or not they think they will buy crypto within the next 10 years. 22% of respondents, equivalent to 4.5 million people in the Nordics alone, indicated that they would invest in crypto within the next 10 years. And then to touch on the topic of age brackets and also the generational divide, which we are supposed to talk about today, we see that both these figures that I mentioned are very dominated by young adults. Ownership in the Nordics is very concentrated among people aged 20 to 39. Whereas for the question, if you believe that you will buy crypto within the next 10 years, within that question, 35% of all respondents aged 20 to 39 opted for, yes, I will buy crypto within the next 10 years. So it's a huge dominance of young adults being interested in crypto and also intending to buy crypto. And it's also worthwhile mentioning that these surveys does not ask teenagers nor children what they believe they will do in the future. And this is also an investor group into the future that will have all the tools ready to understand crypto being raised in a smartphone internet era. So these are very important figures for the crypto market as we progress, and also just to highlight that we are in a generational divide, and crypto is really, really the most important and interesting asset class among young investors. Just a small anecdote from the Norwegian survey. It was actually more people aged 20 to 39 in Norway who stated that they owned crypto than there are Norwegians in the same age bracket that trade equities through brokerage platforms. So that really goes to show how big crypto has become in the Nordics.
That's a great anecdote. I don't think I had picked up on that before, but that's important. I think, Samir, this is right along the lines of what you've been talking about for several years in terms of the importance of this, of younger generations adopting crypto. I mentioned up front, younger policymakers tend to have a more favorable outlook on this asset class. Can you talk a little bit about, as the CIO of a crypto asset management firm, how you view this generational divide playing out over time?
Yeah, sure. So first of all, it's very interesting to see that we see the same behavior when we look at Latin America. And we have more data about this because of the ETFs, but like crypto ETFs been running here for a few years. But if you look at there are more investors trading crypto directly on crypto exchanges than investors on the stock exchange. And there are more investors holding crypto than investors holding treasuries. So you see that this new generation is actually looking for crypto in a very differentiated way. There's a lot of demand on that side, and we see this generational divide. It's not something new. This is basically happens with every new transformational technology. So it's very hard when you have a new technology that's really changing paradigms. It's very hard for the older generation to grapple, to understand that, and to embrace that. The last time we saw that was probably with the internet. So when you look back in the 90s, the internet was used by just teenagers, and throughout the 2000s, the internet has been used by young adults. They started to create value, innovate on the internet, and create those multi-billion-dollar companies. There are now the incumbents, right? And this generational shift happened throughout the internet. The generational shift happened in the personal computer revolution as well. So back in the 80s, the personal computer was basically a hobby by kids who were playing their garage and trying to experiment with hardware, and has become the largest industry globally. So this is not something new and not something that is specific to crypto. The big difference for crypto is it's also a technology that you can invest in. So when you look at the other technological waves, most of the investment came from venture capital funds financing that technology. And crypto is financed, of course, by venture capital, but also by retail investors throughout. So this is very important. And it's very important when you look ahead as well, because there is a generational shift happening. The young adults, between 20 and 39, in 10 years, they will be between 30 and 49. They will be in decision-making positions, and they will be way more inclined to invest in crypto, to embrace crypto, to use crypto in their companies than this current generation. And they will also have more access to wealth. When they are even if they are allocating 1% of their wealth now is nothing compared to 1% of their wealth in 10 or 20 years. So this is very promising when you look at crypto as a technology, the adoption of crypto as a technology, but also when you look at demand and supply-demand dynamics and price impact throughout the coming decades.
And Vetle, Samir mentioned in Latin America in particular that he's seen some of the same trends that you mentioned seeing in the survey. Are there differences in the Nordics relative to other regions of the world in terms of this, younger generations really adopting crypto assets at a faster clip, or is it relatively consistent globally from what you've seen?
This is definitely a global trend, and we see this in surveys across many different countries. Grayscale surveys now recently published indicate that 67% of millennials and Gen Z generations believe that they will buy crypto in the future and are think that crypto will shape the modern financial infrastructure, whereas for baby boomers the figure is in the 20%. So that's a clear evidence of the same pattern emerging in the US. And then we also see the same in service run in both Germany, Canada, and the UK, and you can also see it in service in Asia. So this is clearly a very common theme across jurisdictions, and to me that's quite interesting. Or I really understand why my generation is far more likely to understand and delve into crypto than the generations ahead of me, because I grew up just in the era as the internet started to escalate. I've been used to making mobile payments for small, relatively bad browser games on my computer, and buy FIFA points in EA Sports, and also bought international groceries from internet providers from an early age. And really, for me, money has always been something digital. I got a debit card as a 13-year-old, and have mostly paid attention to my cash balances via a digital UX from my bank. So the transition to something within the crypto landscape is not all that different. It's money I can't touch, and then crypto has that added benefit of it being money I can control myself. And then on top of that, like the generation that owns the majority of crypto exposure right now, my generation, we were also young teenagers or even children during the great financial crisis. I didn't feel the great financial crisis impact my everyday life once it happened, but I've definitely felt the consequences of it. After the financial crisis, interest rates have been very low. This has led housing prices to escalate, particularly here in Norway, making the housing market quite unreachable for many young adults. In addition to that, equity prices have rallied more or less continuously in the past 13-14 years, giving a huge wealth effect to current owners that were equity owners that were at an age where they could invest once the market started accelerating. So this has sort of created a slight resentment or a disdain against like the current system, and at least a bit of curiosity towards alternative systems. So within my generation, you have the combination of being used to digital money and the trading online for various points, and also curiosity incentivized by the system to see if there are other existing alternatives that makes sense for us to invest in.
Yeah, and I think that's certainly, you're not alone in Norway with that sentiment. That's another global phenomenon for sure. And I think in the US, in particular, getting back to kind of the adoption of crypto, arguably the most important institutional development in crypto this year has been the adoption of Bitcoin ETFs in the US and the acceptance of those. And Samir, one of the things leading up to the approval of those ETFs, one of the main kind of messages was that this is going to bring boomers into the crypto ecosystem. And so I want to ask you, have we seen that? And do you see that? If we have not seen that yet, do you see that as something that will happen in the short term, in the long term? How will that actually take shape?
Yeah, so we're seeing that. So we're seeing adoption by registered investment advisors, institutional investors, and it's interesting because in the US we don't quite have the data, but when we look at other markets like Brazil, for instance, so ETFs have been trading here for a few years. If you look at the average age of the ETF investors, crypto ETF investors, the average age is above 40. So it's very different from what Vetle was saying, that the average holders, like the average age is like between 20 and 39 when you hold crypto directly. when you hold the ETFs, the average age of the investors is above 40. So that's why we believe that ETF is the instrument that will make boomers invest in crypto, and that will open up for boomers in the US. Because that happened in other countries, and we can see that in data in Brazil. And what is also interesting to see is that the average investment size, when you compare a retail investor trading on a crypto exchange and a retail investor buying ETFs, it's very different as well. So the average investment size in the crypto exchange here in Brazil is something like $100. Okay, so that's the average investment side of each investors. When you're looking at only retail investing in ETFs, also in Brazil, the average investment size is $2,000. So it's 20 times more. So every investor that you onboard in the ETF invest like something like 20 times more in size. And that makes sense because the boomers are investing, and the older generation is investing through ETFs, and they have more capital to invest. The 5% allocation that they could make in their portfolio is probably bigger than 100% allocation that you get from a 20-year-old like in college. So it's very interesting to see that also being replicated in the US. Another very important aspect is when we talk about institutional investors, the decision makers of those institutional investors, they are like from the older generation. They are above 40, right? So and they are way more comfortable in investing through the traditional securities market with a professional asset manager taking care of this, with institutional custody holding the crypto. They're way more comfortable with that setup than going directly to the blockchain, setting up their own wallets and taking care of their own custody, right? This is also a generational divide. Like the generation that didn't grow with crypto is not comfortable with self-custody. It's not comfortable with being their own bank. They're not used to not having intermediaries, not having someone to call to. So as we see this shift in generation, maybe like the newer generation will be more comfortable with self-custody, with holding their own assets, being their own bank. But that's not the reality of this current generation. That's why we believe that the ETF is the instrument that is going to allow for boomers to allocate into crypto. We've seen that in other countries, and we've seen that in the US.
Yeah, and one of those other countries I think is Sweden, and I'd be interested, Vetle, in your perspectives and kind of how people are accessing crypto, whether it's direct through exchanges or through the ETP structure. And I don't know if you have a breakdown in kind of the younger folks versus older folks. To Samir's point, it's the older generations that tend to allocate through the regulated ETF or ETP structure. But would love your insight there.
Yeah, I don't have an age oversight of that, but I do have figures that would sort of touch on what Samir mentioned about the ease of access via ETPs, because it's also based on the recent survey that we ran in the Nordics, where we asked all the respondents across the countries what kind of exchange they used to buy crypto exposure. And from the survey, we found that Swedes were particularly active in ETPs compared to the rest of the Nordic market, with 27% of all Swedish crypto owners purchasing crypto via ETFs on brokerages or ETPs. And that likely stems from XBT provider back in 2015 launching the first Bitcoin tracker, and then being acquired by CoinShares, and then the entire Swedish market of crypto ETPs expanding from there. So Swedes have for a very long time had the convenience of buying crypto via brokerage accounts, whereas a similar dynamic has not been true in the rest of the Nordic countries, where in Norway, domestic exchanges actually dominate usage and are more popular than Coinbase or Binance, due to the Norwegian krone being relatively small, and also Norway is not a part of the EU, so it's some friction in capital transactions and converting the Norwegian krone, which increases the spreads, so it's more efficient to use the Norwegian exchanges. Whereas in Denmark, international exchanges are very popular, based on the fact that the the Danish krone is pegged to the euro, and Denmark is part of the EU, making the cost of trading via international exchanges slightly smaller. But in Sweden, which has had ETPs available for a long time, we definitely see Sweden as like an outlier in terms of where people trade crypto exposure, and it's very common. But it's also been a common or a growing trend in Norway for people to use ETPs to buy crypto exposure in the past few years. So while Norway was a bit late due to late listings, it's happening here as well. So ETPs are definitely also gaining popularity in other parts of the Nordics.
You guys also did a recent report on the impact of Ethereum ETFs, and so this is a question I think probably for both of you. Maybe Vetle, you could tackle it first, but what will be the impact of these ETFs, right? If they are finally approved for listing in the US, in terms of the ecosystem, Ethereum, what that means for the adoption of crypto going forward. So maybe Vetle, if you wouldn't mind addressing that first, and Samir, I know you have thoughts as well.
Yeah. So what I looked at earlier last week was trying to estimate flows, whereas like the major impact for crypto is that it sort of expands access, and it clearly highlights that crypto is more than just Bitcoin, and it also makes Ethereum available to trade, and maybe in the future US spot ETFs for other products if the SEC sort of moderates its stance, and you can have surveillance sharing agreements with other markets than just the CME. But like for Ethereum, I think it will contribute in quite a substantial amount of interest and also flows from various investors. I've seen estimates from other research houses and other analysts that Ethereum will attract in the range of 15 to 20% of the capital that Bitcoin ETFs attracted. And I actually concur with those figures. I think they are a bit too low, because if you compare relatives from the ETH ETP market with the Bitcoin ETP market, you find that Ethereum ETPs have 28% of the AUM of Bitcoin ETPs. And on CME, the regulated futures market, the USD value of futures contract in Ethereum represents roughly a third of the value of the same contracts in Bitcoin. And also Ethereum is also a third of Bitcoin's market cap. So everything just sort of resonates with the flows being higher than what other analysts are expecting, which has led me to expect $4 billion worth of inflows in the first 5 months. That represents 28% of the $13.8 billion inflows to Bitcoin ETFs. And what that means for Ethereum is that current prices, $4 billion, is equivalent to almost 1% of the circulating supply in ETH. So it creates the same kind of dynamic that we saw in Bitcoin from January to March, where a lot of the supply is absorbed by these investment vehicles, which should be very beneficial for the Ethereum performance relative to Bitcoin from here on. So I'm quite positive on flows. I'm quite positive on what it means for accessibility to Ethereum, and also think that Ethereum will shine from a result of this and outperform Bitcoin as we advance into the summer.
Yeah, no, I tend to agree. And again, I think like we learn a lot by looking at other regions. And when you look at all the other countries that have both Bitcoin and Ether ETPs, they have around like something between 20 and 30% of the AUM of the Bitcoin ETF. So we don't expect the US to be different. Remains to be seen how long this will play out and what the adoption rate is. I think some of the analysts that are more pessimistic about the flows on Ethereum, they think that Ethereum is harder to explain for boomers. I tend to agree. Okay, so the digital gold thesis of Bitcoin is already very hard to explain to the older generation. And when you look at the like smart contract platforms and decentralization and all, this is even harder to explain to the older generation. So that's why some analysts are more pessimistic about the ability of Ether ETF to attract flows. But if you look at market cap weighting, if you look at demand from other countries, if you look at liquidity, like you said, on the CME, but also on the spot markets, all the indications are that those ETFs are probably going to be in the lines of between 20 and 30% of the AUM of Bitcoin. It's also important to remember that the first wave of adoption of those ETFs is mostly retail and hedge funds. So hedge funds basically doing basis trading and other more active strategies. So they're not necessarily holding this for the long term, they're trading it, but they're trading this in huge sizes, right? And the basis trading on Ether right now is very hard to execute on the CME versus spot, because it's harder for the hedge funds to access spot. So the same thing, like we think this is going to happen with Ether ETFs. We're going to see a huge flow of hedge funds starting to do the basis trading and other active trading strategies on Ether spot ETFs. And we're going to see the first wave of flows coming from retail investors. And when you look at advisors, they're probably looking into this as a market cap weighted investment. So if they decide to invest 1% in crypto or 5% in crypto, they might as well put 70% of Bitcoin and 30% of Ether, since those ETFs are available. That's the behavior we see in other countries. So why would that be different in the US?
Yeah, I fully agree. And I also think that while the lack of staking in the US ETFs is a slight issue, I also think that the impact of it is quite like overemphasized. 98% of all assets held in European Ethereum ETPs are based on non-staked exposure. And 99% in Canada is based on non-staked exposure. So this is not a figure that really disincentivizes investments. It's just something that will lead to a minor underperformance compared to the staked alternative.
We've got a few minutes left of kind of prepared questions, and then we do have some questions from the audience that we'll get to here momentarily. But I think maybe I do want to kind of get to this sort of bigger meta question in terms of the remainder of the year, and give you both an opportunity to share your perspectives on what you see playing out. I know it's a very big, broad question, but if you have any insights into, what the remainder of 2024 will look like, given some of the adoption advances that we've seen in the first half of the year. Would love to get your insights on that. Vetle, if you don't mind starting, and then Samir, you as well.
I can definitely start, and it sort of resurfaces back to the topic of the demographics in crypto, because the US election is coming up, and I think that will be a very important price mover in the market overall. Now you see both Joe Biden and Donald Trump struggle with securing young voters. An anti-crypto stance is not really politically something that secures a lot of voters, whereas Trump has started to go full on crypto positive to secure more votes. So this puts crypto high on the agenda in the political debate in the US, which will just contribute in sharing visibility of the asset class. And then this also fits nicely with like the Bitcoin halving starting to materialize in effect, because the supply has the decrease in issuance has happened, but miners adapt to it before it happens, builds up war chests and try to manage the summer that comes. But then as war chests are drained and the Bitcoin issuance is as small as it is, like the small incremental impact on price may happen, and that's happened in the past halving cycles, that prices have really started moving 100 to 200 days after the halving. And then third thing that I will pay attention to in the next months, alongside the ETF approval, is all bankruptcy estates. some of that will contribute will likely be a negative, have a negative market impact. The Mt. Gox estate is going to distribute 140,000 Bitcoins to creditors from 2014, which could very well lead to a relatively sizable selling pressure impacting the entire crypto market. But then as we near the end of 2024, maybe early 2025, FTX's bankruptcy estate is expected to pay out a bit more than 100% of the USD value that creditors claim in USD, and I think that will like contribute with excess buying pressure back into crypto, as this is investors who were already quite glued into the market who are inclined to reinvest. So I think one bankruptcy estate will contribute in making the summer a bit slower than anticipated, whereas both the election lagged halving effects and FTX's bankruptcy estate will contribute in a positive end to the year.
Yeah, and from my side, I've been almost very repetitive about this. I've been talking about this recovery phase since early last year, which like tends to unfold throughout 2 years. We're expecting that, like, if history repeats, we're expecting that to turn into a bull market in Q4, around Q4 of this year. And then we're probably going to see another like bubble-like scenario on crypto prices. So you have that, you have the halving and the Bitcoin ETFs creating demand shock on Bitcoin prices, right? So remember, even if the flows have like slowed down recently, and we saw some record numbers in the previous day, there's still a huge imbalance between the marginal demand only from the ETFs and the marginal supply that is being produced by miners every day. So there's a huge imbalance that's only increasing. This imbalance is only increasing. So this tends to create a positive price pressure. When you look at Ether, I wrote about this in my latest notes. We see like at least some 5 factors that are very positive for Ether when you look at like 12 to 18 months. We're seeing like the outcome of the US elections. I think that even like if Trump wins, looks like it's going to be very positive for crypto. But even if Biden wins, I think the Democrats are realizing now that crypto voters are very important. And we've been seeing some signals of this change in posture. So maybe this election, irrespective of who wins, this election might be a dividing, a milestone for crypto regulation, and for especially for the politicians to see the value of regulating crypto in a positive way. So we may see some positive tailwinds on that front in the US. We have the Ether ETFs coming up, and that's probably going to create a next wave of demand. And this is only talking about this external developments. We're not talking about how the technology is evolving, right? How the scaling solutions on smart contract platforms are evolving. And this is creating the setup for a next wave of growth, for a next wave of experimentations in applications that really can go to billions of users, simultaneous users, in the coming months. So this is all very positive, and we have the macro environment as well, which is looking like over the coming 12 months at least, we're going to see like the big economies is starting to reduce their interest rates. And this is also a positive headwind for crypto overall. I think even more important for Ether and smart contract platforms than it is for Bitcoin probably, but it's definitely a positive headwind. So there's just like so many signs of an asymmetric outcome for crypto in the coming months that we're very optimistic. We couldn't be more optimistic when you look at 12 to 18 months.
Awesome. That's we actually have some great questions here that I want to get to in the next 10 minutes or so. And the first one I'll ask is actually somewhat related to what we were just talking about, but with regards to regulation. And the question is, can you comment on the regulatory environment in Brazil and the Nordics? Brazil's central bank and its securities regulator have kind of been on the frontier, the forefront of this. And then they also note that Sweden was maybe the first country to allow ETPs. So Vetle, I don't know if you want to talk about the Nordics first, and then Samir, you can talk about kind of what's transpired in Brazil and Latin America.
Sure. As stated, Sweden was very early with allowing ETP structures, which has been very beneficial for Swedish crypto owners. Whereas in terms of like crypto asset regulation, most of the Nordics, even Norway, are going to adopt the comprehensive MiCA framework issued by the EU. Across all of these countries, we now have full access to the ETPs. There are differences in tax laws and how crypto is handled, and also different perceptions on whether or not mining should be legal in the given countries. It's a debate going on in Norway at the moment. But whereas for the individual investor, the regulatory clarity is becoming very good following MiCA, and the framework is very comprehensive. So crypto is really becoming a regulated asset class here in the EU.
Yeah, when you look at Brazil, like also like the adoption of the ETFs have been a milestone for crypto regulation overall, to how regulators see crypto adoption. We have like a regulatory framework that was approved by the Congress, and it's probably going effective starting next year. That will regulate crypto exchanges and crypto service providers in the country. That will give regulatory clarity and protection, investor protections, which will favor adoption. We have the central bank, the Brazilian central bank chairman, very adamant on a vision of a future tokenized economy, that the economy overall as a whole will be tokenized, and like blockchain is the technology that's going to allow us to have a more efficient capital market and efficient economy. So they're pushing forward this agenda on and it's not only a central bank digital currency, it's a central bank blockchain platform that will allow for us to tokenize any asset and trade those assets, and even have smart contracts instead of physical paper contracts. So this is creating a very positive environment, a regulatory environment overall in Brazil, and even like to the generational shift point. And when you look at the decision makers, the regulators here in Brazil, the average age is between 45 and 55 years old. And that's a stark difference when you look at the US, for instance, where the regulators have an average 75 to 80 years old. So it's a very different generation that's looking at these asset class and looking at the future of the asset class and how to incorporate this into the economy. And you can see how they see the world like in a completely different stance when you look at just the age of the regulators.
We didn't get a chance to talk about a lot about use cases, and Samir, you mentioned the infrastructure, some of the huge infrastructure developments that have gone on. We have a question just about it looks like it's specifically for you, Vetle, about the investment case for some of the smart contract based segments of the crypto market. And so if you don't mind maybe sharing a couple thoughts there, and I'm sure Samir, you might have a thought or two on that as well.
Yeah, so it's very evident and clear that smart contracts offer a very useful tool for the financial world. You have transparency, 24/7 settlements without intermediaries, which is just huge, and it reduces friction quite a lot. Smart contracts products are extremely well positioned to perform well and also transform the financial ecosystem, especially now that big traditional players are entering into the tokenization landscape with real world assets hitting the blockchain, and then DeFi markets and eventually lending markets spiraling out from that, where you can use your tokenized exposure as collateral for new trades and exposures. It's very frictionless and very efficient. So everything points towards smart contracts taking over. whereas the investment thesis for various smart contract platforms or DeFi tools is a bit more challenging to have a like general view on. It depends a lot on how tokens are classified. For Ethereum and for the big layer ones, it's more clear. Like you can see that this protocol will likely have a lot of activity within this ecosystem. Whereas for the Uniswaps, Aves, or the other DeFi tokens, it might be a bit more challenging to with certainty form a view on how that investment will fare, because the tokens are somewhat similar to securities, and you can make that argument, and that would dramatically limit the growth potential of these tokens.
Yeah, and just to complement, since we're talking about a generational shift, think about what we said in the beginning of this webinar. So the younger generation, they're more likely to invest in crypto than to invest in equities or even treasuries. Okay, so if the ETF is the instrument that's going to bring the older generation to crypto, tokenization is the instrument that's going to bring this new generation to the traditional asset classes. Okay, so it's more likely that a Gen Z would invest in a money market fund, a BlackRock money market fund through its token, through the tokenized version, than they are likely to invest in the money market fund directly through the broker dealer, paying commissions and just like a very friction process. So tokenization is a huge avenue for growth on adoption of blockchain over the coming years. And this will happen as this generation matures, as this generation start to demand new products, different assets, real estate, like debt and money market funds, stable coins. So tokenization is really like one of the technologies that technology that we believe is going to drive adoption of smart contract platforms in the short term. When you look at 5 to 10 years, there's a lot of other things. Web 3.0, you have digital culture, there's a lot of different applications, but really tokenization is the fundamental first step for this technology to thrive. And the second question on how to value this, if you think about it, like the token of each smart contract platform is used to pay for transaction fees. So it's basically a supply demand of block space, of computational power. So you're paying to use that computational power to run the smart contracts. So the more demand you have for running those smart contracts, and since the token is not infinite in its supply, the more demand you have for it, the more impact you see on prices. So if you think that demand over the next 5 years is going to increase, the demand for computational power on Ethereum or Solana is going to increase over the next 5 years, then you can see how that will impact the token price.
Yeah, so the last question we have here actually gets back to the very beginning of our conversation, and maybe Vetle, you have some information on this from your survey, but the question is around these younger generations. Are they acting like traders? Are they in and out of these markets, or are they actually, hodling for longer periods of time? Do you have any information on that?
We sort of have information. You have to infer what the changes in the Norwegian ownership data from year to year means. What we have seen in those surveys is that when crypto ownership rates declined in 2022 during the bear market, it was a majority of the decline stemmed from young investors. So it is a higher probability that a young investor is more in and out and trading the market than sitting for the long run. But that's like 40 to 50,000 out of the 400,000 Norwegian crypto owners at the time. Still a vast majority of owners after that were young investors. So among young investors, it's a like bland mix of traders and long-term investors. Yeah, that's like the core of it.
Yeah, and Samir, I think obviously the ETPs and ETFs are going to lead a lot more people to investing in this asset class long term. If you look at, for instance, the state of Wisconsin, a massive $150 billion pension plan that now has exposure to Bitcoin ETFs. They're the exact opposite of short-term traders. And so if you have any kind of final thoughts around the short-term versus long-term mentality in this space. If you see any changes going on with the acceptance of ETFs, would love to get those thoughts before we wrap up here.
Yeah, no, so for crypto directly, it's very hard to have the actual data. You need to basically cross a lot of data and try to come up with a conclusion. With the ETFs, we have more data, so we can see that. So for instance, when you look at the most popular crypto ETF in Brazil, Hash11, and as the crypto index ETF, it has something like 130,000 investors overall. And throughout this bear market, so price went down 70%. We didn't see like a big decline in the number of investors overall in this ETF. And we now start to see like numbers going up, the number of investors going up. So that indicates to us that those investors in the ETF, they tend to be more long-term. Even the retail investors, when you look at the behavior of institutional investors, are definitely very long-term. But even for retail investors, they tend to hold this for longer than you expect for a retail investor trading directly on a crypto exchange.
That sounds like a pretty good place to end. I promised I'd keep this to 45 minutes, and we're right at that time. So Vetle, thanks so much for joining us. Hopefully we can do this again. When you guys maybe have some new surveys and research, your website is awesome in terms of resources for that. So encourage anyone to visit that if they're looking for new research. And Samir, thanks as always. Visit hashdex.com for all of our notes from the CIO, from Samir, as well as a number of other articles and research that we update regularly there. So thanks everyone for joining us, and we'll talk to you all soon. Take care.
Thank you. Bye-bye.
Thank you.